Kate, so Budapest preparing to host the final of the Champions League at the end of May. PSG and Arsenal now qualified. Their fans are already flocking to book flights and accommodation.
Yeah, there was huge enthusiasm and celebrations, of course, in the streets of Paris on Wednesday night, Sharon. And travel sites in France say that searches for flights to Budapest soared by over 400% on Wednesday night after the French team clinched its spot in the final. EasyJet and Wizz Air have added more direct flights from both London and Paris to Budapest for the weekend of May 30th. And prices, which were already higher than usual because of the energy crisis, have jumped still further. Just an example, a round-trip ticket from Paris to Budapest for a weekend in mid-June is selling for around €400. That same flight for the match weekend is just under 1,200. It's a similar story for flights from the UK and, of course, hotel rooms and rentals. It doesn't include a ticket for the match, of course. Official club supporters had a set price of €70 per ticket, while seats for the general public have been sold between €180 and €950. Resale sites, of course, advertising them at much, much higher price points. Many fans say they are willing to fork out the cash to see their teams in action. One warning from travel experts that we're hearing a lot of, though, fans should double check their bookings to make sure that they're not accidentally flying to Bucharest, Romania, instead of the Hungarian capital. Apparently, it's a common mix-up for sports fans, including a group of French football fans in 2021 who missed their team's Euro game in Budapest, having travelled some 500 miles away instead. Well, just 2 weeks after the Champions League final, the World Cup will be kicking off in the US, Canada and Mexico. The sports governing body FIFA is taking heat for the high ticket prices, with seats for the final in New Jersey starting at 10 times the price of the cheapest seat for Qatar's 2022 final. FIFA says the prices are due to high demand and America's exorbitant ticket resale market. Brian Quinn has the details.
It's the planet's biggest sporting event, with a price tag to match. As North America gears up to host the 2026 World Cup, organizer FIFA is under fire for stratospheric ticket prices. President Gianni Infantino citing the US resale market as he sought to defend FIFA.
We have to apply market rates. If we were to sell tickets at the price which is too low, these tickets would be resold at a much higher price.
World Cup revenues first surpassed those of the Olympics with 2010's South African edition, but this year's move to the US has taken it to another level entirely. While the 2024 Paris Summer Games brought in around $5.25 billion, FIFA expects revenues for the 2026 World Cup to hit $13 billion, with $9 billion of that getting raked in this year. Roughly a third of that will be via tickets that are priced much higher than 4 years ago. Face value for seats at the 2022 World Cup final in Qatar ranged from $206 to just over $1,600. For the 2026 final in New Jersey, the range is $2,030 to more than $6,300. FIFA says demand is driving the market, with more than 500 million ticket requests received, and some tickets to the final already listed on resale sites for as much as $2 million. A number of groups, including some U.S. lawmakers, have called for FIFA to lower ticket prices, and it has responded with $60 tickets for an extremely small number of seats tucked into the highest corners of stadiums.
The British energy giant Shell has become the latest energy company to report soaring profits since the start of the Iran war. $6.9 billion in profits for the first 3 months of this year. That's about $1 billion more than the same period a year earlier. The company did say its oil and gas output had fallen by about 4% compared with the final 3 months of last year because of the Iran war. On Wednesday, Norway's Equinor reported its highest quarterly profit in years. France's Total Energy saw its profits up 50%. BP's quarterly profits quadrupling in recent weeks. These bumper earnings have sparked renewed calls for governments to impose a windfall tax on energy firms, at least during the current crisis. Activists say that money could be used to support businesses and households that are grappling with those higher costs. Let's check in on the day's trading action now. Oil prices have dropped slightly as investors wait for news on the Iran war and the possible reopening of the Strait of Hormuz. US WTI closing just under $95 per barrel. The international benchmark Brent crude did dip under $100 per barrel earlier, closing just above there. Remember, before the conflict began, Brent was trading at around $70 per barrel. The major European indices closed in the red, about 1% of losses in each London, Paris and Frankfurt. Wall Street has closed lower as well, although the S&P 500 did hit a new intraday high earlier in the session. Well, earlier on Thursday, Japan's Nikkei index soared to a record high, following South Korea's Kospi earlier in the week. Asian markets are being driven by a boom in tech spending, as Yuka Royer explains.
Sell in May, go away. Not yet, say investors in Japan. Tokyo's main stock market came roaring back from the Golden Week holidays to notch a fresh record.
Efforts to end the conflict have made some progress. On top of that, during the holidays here in Japan, semiconductor stocks regained momentum over in the United States. In response to that, premium chip stocks also surged in Tokyo today, pushing the Nikkei average up.
The 6% jump added to Nikkei's record run. The index has increased by 70% over the past year. The market rally even intensified after the start of the Iran war, rising 23% since the end of March. It's not just in Tokyo. South Korea's benchmark Kospi has doubled in the past 6 months. At the heart of the bull run are tech and semiconductor companies. After a lull earlier this year, when worries about overinvestment dented appetite, fresh investor frenzy hit Asian big tech like TSMC and Samsung that sell their chips to US tech giants and hardware to Nvidia. Still, there may be just too much hype.
AI certainly has great promise, but the current market is price-driven, regardless of such fundamentals. People buy because prices are rising, and prices rise further because people are buying.
Off the trading floors, ordinary consumers are facing a different reality. The cost of living is rising, exacerbated by the energy crisis from the war. For Japan, the IMF is forecasting GDP growth of just 0.7% this year.
Sharon, that's all for now.
Thanks so much for that, Kate. Kate Moody there, our business editor here at France 24.